Hey guys, what's going on? It's your big dreamer and doer, G Dinero, coming to you today with another TA Tuesday. This time it's September 30th, 2025. We'll talk about Bitcoin, Solana, MicroStrategy, Tesla, all of your favorites and more. But first, remember, none of this is tax, financial, legal, investment advice. It's your buddy G Dinero helping you increase your financial literacy to help put you and your family on that path to financial freedom. And before we get started, as always, some special thank yous go out to Jet Dog Superstar, talking about a great summary, and amazed that I didn't get more likes for it. Guys, I don't do this for the likes. I do it to help you, okay? At the end of the day, but Jet Dog, I appreciate that. Mama Black 7, thank you. Loving everything on TA Tuesdays. Always anxiously awaiting them. At LH_78XE. Very nice share. Coach G, tips on minding the gap that I talked about. That was actually a couple weeks ago. And Tommy Twista, another great video. Thanks. Hard to decide what day is his favorite day. So thank you guys. Those are some people that are consistently tuning in every single week, week after week. And I just want to say thank you. That's what I do this for, is for you guys, right? Not for the likes, not for the comments. Well, the comments, yes. Not for the likes, not for the subscribes necessarily, but more than anything, to help as many people really understand the charts at the end of the day. That's what TA Tuesday is all about. So with no further ado, let's dig right in. As always, we will start here with the Bitcoin TABI model. The TABI model, what you'll notice is a difference from this week to last. That's because Invest Answers just updated some of the back end, some of the data that's getting fed into the model. And whereas we were light orange for the last several weeks, we are now back to yellow. So you'll notice that the chart here is bright yellow, right? That means that we are in a neutral position. The market's not overheated. It's not underheated or needs to be bought up. It's kind of right there in the center from on-chain analytics, right? And we need to go through light orange, dark orange, light red, and dark red before the market is significantly overheated. Conversely, going the other direction, we would need to go through light green into light blue, darker blue, and the darkest of blues to be back in a bear market. So we're nowhere near the bear market. We're nowhere near the top. We're kind of just in the middle in limbo right now. If we dig in and we look, we are slightly above the short-term holder cost basis. Just fractionally, it's now up to 111,738, 111,738. A special thank you to James Check from Check on Chain. That's where I pull these numbers from. And the true market mean is now up to 79,160. Think of that as a floor during a bull market. You can see we tagged it down here. In fact, it was lower at the time. It was down in the low 70s. Now it's in the high 70s. But back then when we hit it, it was down here. The true market mean has been slowly grinding up, and the short-term holder cost basis has remained over 110 now for several weeks, right? The Meyer multiple just barely above 1. That's low. MVRVZ just barely above 2. That's also low. There's some talk that these may not be as accurate of metrics to use in the future now that institutions are involved, ETFs, treasury companies, and everything else. And then again, the historical volatility, we've talked about that on and off, guys, for the last few weeks. The historical volatility is insanely low. It's almost like this lull before the storm, right? The calm before the storm. There are some thought leaders that think that things could go ballistic when they finally go because of this quiet volatility. It's kind of lulled investors to sleep. I know James Check on Chain talks a lot about that. If we go over to the Bitcoin Daily, over on the daily chart, we are still in a structural uptrend, making higher highs and higher lows ever since April, right? April the 7th. If we wanted to actually put a number on that and say, well, how much have we gone up since then? Since that low, we are currently sitting at about 53% above the low. We've gone as high as 67%, but pulled back a little bit. And that's since April the 7th, right? They're in the heat of all the tariff tantrums, when people were worried that they were going to be inflationary and that was the end for a lot of our risk on assets since then, we've gone to the moon. But we are finding support here. That support with Bitcoin is right at that short-term holder cost basis. You notice it was our resistance back here in May. It was resistance again in June. It was resistance in July until we broke above it, then supported on this 110 level, just barely dipped below it here, back up above it, back below it here. So we're dancing. I call it dancing on either side of 110, plus or minus $5,000 to $10,000 on either side of it, right? That's the line in the sand right now, is that short-term holder cost basis. That's the battle that we're facing. We're still well above the 200-day moving average, which is down here at 105. So to the upsides, nothing's changed. $118,000 is the resistance to the upside. To the downside, our strongest level of support's down here at about 104.5 to 105. That's where the 200-day moving average is. But we haven't broken below 108 recently. 108 has been the intermediate level of support. We go over here and dig in on the 4-hour chart for Bitcoin. We are slightly overheated to the upside. We did just come off of a very strong reading on RSI. So it's not surprising that we pulled back a little bit and we're taking a breather. You got to remember, just last week, we were down at 108, 108.5. Yesterday, we hit 114, almost 115, 114.8, almost 115. So that's a massive move, almost a $6,500, $7,000 move in a matter of days, right? From last Friday to Monday in just 3 days. So not surprising. We went from being oversold down here and getting all kinds of buying signals on the chart, including a buy signal for the first time since the one back here on Wednesday, September 24th. And then you'd have to go all the way back into August, the beginning of August, right? Notice that the 50 and the 100-day are acting as resistance. If we dig in here, you can clearly see that we made it just above the 100 in the 50-day moving average and then came straight back down again. So we were not able to hold those as support. The 100-day also acted as resistance back here in about a week and a half, 2 weeks ago. About a week ago. It seems like longer than that. A week ago. Again, resistance starts significantly at 115 and extends all the way up, if we want to look at that, all the way up to 120, right? That's just a zone. The middle of that zone, 118, that's where the strong resistance is. And then again, support is down here at 109.5 is the key level of support, but it's also a zone, right? It's not one specific spot in the sand. Think about sentiment for a second with Bitcoin, right? There's almost like this anxiously awaiting something to happen, whether it's the strategic Bitcoin reserve, whether it's another country announcing they're going to buy, whether it's Bitcoin catching up to gold, which has been on an absolute tear lately. Absolute tear. Gold's been just going nuts, right? The money supply is expanding. So as the money supply, I don't think we talked about that back here, the liquidity. But global liquidity made a new all-time high back here at a little over 100, at about 100.48, pulled back, retested this level that we had been at before, and now is starting to go back up again. So I would expect to see this line continue up and to the right. As that liquidity increases, so too does the price of a lot of our risk on assets. There is a delay though. If we come over here to the Solana Bitcoin chart, that thing made a new local high, not all-time high, but I mean, the first time we had gotten back up to 0.0021 since all the way back at the beginning of the year, right? So 7 months later, we're finally making a new local high. We have definitely changed direction, meaning we're making higher highs and higher lows along the way. So it looks like Solana will continue outperforming versus Bitcoin, at least in the short term. It did hit a level on the mean reversion here where it was about 1.5 standard deviations to the upside. RSI went well above 70. Those are sell signals, short-term sell signals, right? Maybe a quick sell-off, which we saw. Here's the sell, a quick sell-off back down to this support zone, testing the top of the support zone, and now starting to grind our way back up. This resistance zone that you see here, that's going to take a while to grind through. So the next major target is that 0.0025. 0.0025 will be the next major target. If we go to the Solana daily chart, Solana daily chart, this is just Solana by itself, structural uptrend since April 7th. Not surprising. We did just come off of a sell signal, third one we've had since April. 1, 2, 3, all three of them ended up in a mean reversion afterwards. So if I use the drawing tool here, we'll notice we mean reverted down after every single one of these sell signals. Not surprising when you have RSI, or when you have the mean reversion getting up near 1 standard deviation or higher on a daily chart. Also notice in all three cases, RSI broke above 70. So start to look for some of these patterns. These are the things you need to learn when you're doing technical analysis. You start to get a confluence of different indicators. What I mean by that is here, you're in the top 1/3 of the confluence clouds. You've got a sell signal showing up on the confluence indicator. You're going up against areas of known resistance. And finally, you've got mean reversion up 1 standard deviation or higher, RSI 70 or higher. All of those things start pointing to a pullback is on the horizon, right? Doesn't mean that it's over, the bull market is over. It just means things are going to take a breather. If you're in a Sol perp trade going long, for instance, those are your keys to get out. You don't want to turn around and go long all the way up and give back 75, 80% of your profits because you turned around and waited for it to bottom back out again, right? Solana on the 4-hour chart, we've just come off of being mean reverted to the downside pretty significantly right here. You can see that on the chart. It was greater than 2 standard deviations to the downside. If I make that a little bigger, you can see it right here. RSI was also down well below 30. MACD crossover right here. This is a little thing that I did to kind of show where are we in relation to, I was trying to make that bigger without clicking on a line. Where are we? How far away from the 200-day moving average are we? So that's what this indicator is basically helping you look at, is how many standard deviations we are away from the 200-day moving average. But we are still significantly above that. You can see the 200-day moving average well down here at like 167, 170-ish. We did bottom out at locally at around 191 here recently. Great place, in my opinion, to go into a perp long at that point if you were looking at levels to do it. Sure, there's a little bit more liquidity below it, but it's only going down another maybe 5-10 points below that. So even if you went in at around 190 to 200, as long as your liquidation price is down there 150, 160 or lower, you're should be good to go. Not financial advice, just how I'm playing it. Notice this says current support zone, current resistance zone. I just really need to change those right now because this was the support for the longest time prior to doing this this video. Now that is actually the resistance zone. So I'll just change that to the current resistance zone. This one would need to say then the next resistance zone, right? So that gives you an idea of where we're going to run into resistance, which we did here on the way back up. Where would the support be? Well, support right now to the downside is down here in this 185 level. So that would be the current support zone, 185, 190, resistance right here where we are right now. Ethereum on the 4-hour chart. Again, I don't have as much fancy stuff on here. I just started covering this last week. I forgot to. My bad, guys. But what we see here is, at least since April, Ethereum's been on an absolute tear, making a new all-time high back here on August 24th. We've almost triple topped there, right? We made a high, made a high, made a high. Can't seem to break through that psychological barrier of 5,000, right? I know we got to 49.55, but let's call that 5,000. Seems to be the new psychological barrier for Ethereum. Big sharp pullback all the way back to what is that, 3870-ish right here, 3825 it says over here on the as the low that we made. So if we kind of zoom in on the chart, coming off of a sell signal back in mid-September, 2 buy signals on the chart, with a trend flip finally here. It looks to be really respecting this 78.6 fib level right here that you see it resting on the bottom of this linear regression channel, coming off of a great buy signal here, here, and here on the mean reversion, the RSI and the MACD, and then you get the green triangle and you get the trend flip. So if you didn't have Ethereum and you were looking to put an Ethereum trade on, 4,000 looks like the number to go in at. But be cautious. Every time you get close to 5,000, it tends to sell right off again. So 4,900, that seems to be the zone right now, is 4,000 to 4,900 with Ethereum. MicroStrategy, everybody's favorite. I know a lot of people lost faith in this guy. I never did. I think it's going to do well over the long run. I think it's going to have growing pains like everything else. There were all kinds of new treasury companies that came out. Michael Saylor changed his mind about whether he's going to ATM the common shares above an MNAV of 2.5. Now he said he'll do it also below an MNAV of 2.5. So a lot of those things have factored in. It has, since he made that announcement, which was back in this area, I think it was like right in here, like beginning of August, right after earnings. So at earnings, he said only going to ATM the common stock above 2.5. And then just a few days later, he made the announcement that they would do it below 2.5. That's what caused the sell-off from around 400 all the way down here to 292 last Friday. We hit 292 last Friday. I'm going to show you some things on the 4-hour chart. We'll talk more about that, but we are mean reverted to the downside right now. We are in the bottom 1/3 of the confluence clouds. We are below the 200, the 50, and the 100-day moving averages. And finally, the MNAV is pathetic. It actually bottomed out. If we look at the undiluted MNAV actually bottomed out right here at 1.19, 1.2. That means there was a 19% premium above the actual Bitcoin holdings on their balance sheet. That was it. A lot of faith lost in MicroStrategy. But if you were to look at most of the treasury companies recently, they're all following this same trend where the MNAV is compressing, because there's so many choices, because it's difficult for them to get the excitement behind it, which gets that premium up. So that's why Michael Saylor uses the preferreds, which we'll talk about later, right? But it is nice to see that the MNAV was on this huge meteoric decline, seems to be leveling right now. Maybe I'm being optimistic or hopeful that it's leveling. But even at an MNAV of 1, I made a video recently, and I'll link it here in a second, but I made a video on MicroStrategy versus Tesla, and I talked about even at an MNAV of 1, if Bitcoin takes off, this thing's going to take off too. So you got to keep that part in mind. If we go into the 4-hour, we've had a lot of fake outs. We had all kinds of buying signals here, trend flip, faked out. Buying signals here, trend flip, faked out. Buying signal here, trend flip, faked out. Buying signal here, trend flip. Is this going to be the one? It is the deepest of all of the mean reversions, where it pulled back hard all the way to below 300, right? All the way to below 300. You have to remember, this asset just 2 months ago was up at almost 460. So in 2 months, it dropped from 460 all the way down to 300. Think about how far away from its all-time high of 550 it is, how much it could grow provided this sentiment comes back, the Bitcoin price starts to come back, etc. I know I seem like I'm making a bullish case for it. I am, because to me, that there's all kinds of buying signals here on the chart. RSI dropped to a pathetically low number right here. I think it was down, if we want to put a number on it, it was down at 23.66, below 24 on the RSI. MACD crosses over perfectly right here. That correlates with the buy signal right here. Like all kinds of things. 300 was my floor level that I was considering for strategy. I kept saying 325 was the support, but if we dipped, we'd go down to 300. We went to 292. So pretty darn close. But on the way back up, we're going to have significant resistances now on the way up. We're going to have this 330 level, 330, 340 level is going to be resistance. Then we got to get through the 200-day moving average, which right now is sitting at around 350. The 50-day is at 356. it'll be down at 350 in no time. And then the 100-day is up here at 375. That really will mark the next resistance zone from 375 up here to 404. So those will be the resistance zones on the way up: 350, 375 to 400, and then again starting at 420 all the way up to almost 450, 445, 450. Okay, those are going to be the zones on the way back up. Tesla had that incredible move a week and a half ago, Thursday and Friday, when Elon Musk bought over $1 billion worth of Tesla stock, right? That caused the stock to gap up. It gapped up 1, 2, 3. There's a fourth one in here that filled right here to here, 4, 5 times. There were 5 gap ups, and as somebody said in the thank yous that I get on the comments, they said mind the gap. I love that. If you've ever been to England, you'll know what that means. Mind the gap on the subway over there, on the underground as they call it. They what usually happens is these gaps typically fill. Not always, right? Not always. It really depends. I actually went and looked, and I think it said that depending on all the other factors involved, gap ups usually fill 75 to 80% of the time, unless it's just like a new regime shift. Like, that's it. This is the new price for this asset. It was way underpriced to begin with. Now, do I believe that Tesla has been way underpriced to begin with? Absolutely. Do I believe it warranted a 100-point move from 340 to 440 or 350 to 450 in just a matter of a couple of days? I really think that was based on just that purchase, that single $1 billion purchase by Elon Musk. It was the largest purchase in history by like fourfold over the next closest biggest purchase, number one. Number two, it was because Elon didn't want to get passed by Larry Ellison. So Larry Ellison at Oracle passed him as the world's wealthiest man. And Larry held that title for a whopping 4 days until Elon came along and said, I'm going to smash buy this thing, drive the price of my stock up. As I drive the price of my stock up, his net worth went up immensely, and he leapfrogged right back up over Larry Ellison. Okay, I believe that those are some of the games that are being played there. We are mean reverted to the upside here on the daily chart. We were way over our RSI. RSI hit 80 something there, 80.54 to be exact. And we're almost got a crossover right here on the MACD. If that crosses over and the light blue line crosses down through the signal line, that's going to give us a sell signal up here on the confluence model. As you can see over here, this is it on the 4-hour chart. So that's where we hit the highest level we had ever hit since June of 2018. June of 2018. So the last time mean reversion hit 3.0 or higher on a 4-hour chart was June of 2018. Significantly mean reverted to the upside. You see the crossover here on MACD as the light blue line crosses down through the signal line. You get a sell signal on confluence right thereafter, kind of linked together. This was our area of support and resistance for the longest time, right around 360 to 365, right? I've got this line here at 363. We have gapped up 5 times. I don't even have the latest gap in up here. Looks like it probably has filled though. So this gap though still has not filled. We gapped up and came back and partially filled it. But there's a area here that we gapped up. There's this area down here that we gapped up. What's the current support? Current support is right here, somewhere between 385 and 405, right? So there is a chance that we come back and retest 400. I know Invest Answers has said 400 to him is the new buying level, right? So if you were considering adding shares to your portfolio, if you were considering adding leaps or synthetic longs, that could be potentially where you do it. A lot of it depends on what are the other signals you're getting. Are you still getting selling type signals with RSI sky high and mean reversion sky high? Those things are telling you it will revert to the mean. So let me give you a quick example here. If you look, the very top of the bullish confluence cloud is right up here. The very bottom of the bearish confluence cloud is down here. So let's call that 260, and let's call this one up here about 490. in the middle of all of that is about right in here, somewhere around that 375. That's the mean. This is the most extreme, the highest you should expect the price to be right now per the Confluence model. This is the lowest that you should expect the price to be right now per the Confluence model. Why is it so wide? Because of this extreme volatility. It made the Confluence model widen. The cloud widened. Where's the mean? The mean's right in the center of all that. Let's call it 370, 375. So if it mean reverts, the price could come back down to that 370, 375 level. Will it? We don't know. But if it mean reverts to the downside, it could actually go all the way back down to 340. Will it? We don't know. A lot of it's going to depend on how this earnings report is received that's coming up. So I know I'm taking a long time on Tesla. I just don't want people to feel like they've missed the train and to chase it. Chasing it, like going in and buying at 440, that's crazy in my mind. Crazy. You could have just bought it at 340 a few weeks ago. So why now all of a sudden jump in at 440? It looks better at 440 than it did at 340 to you. Wait for the buying signals to show up on the chart. At a minimum, I believe we come back and retest 400. Could we go lower than that? Perhaps. People are saying, oh, but earnings is coming up. If earnings is good, it's going to go to the moon. Will it? You can look back at all these other positive earnings. Here's a positive earnings right here that's green and it dropped off afterwards. Here's a green one. It dropped off afterwards. These are red earnings reports. It dropped off. It dropped off. It climbed after a bad earnings report right here. It dropped after a good earnings report. It climbed big time after a good earnings report there. It dropped after a bad earnings report here. It climbed after a good earnings report here. It dropped after a good earnings report right here. So there's no rhyme or reason to it. To try to just bank it on earnings and say it's going up because they're going to report these phenomenal numbers, honestly, it's a crapshoot. A lot of it depends on the guidance that's given. What does Elon say and how does he say it? Is he going to say that the fourth quarter might be a little bit weak? Why would it be a little bit weak? Well, the EV credits are going away. They go away today. Today's it. Get your Tesla today. I've got a link. I'll put that link in here if you want to buy a Tesla. I've got a link because I own a Tesla, so I get referral points and you save a few bucks. So I'll throw that link in here so you guys have it. But are they going to say, hey, we had great deliveries here at the end of the third quarter because of the EV credits going away? So all these people bought a bunch of cars and we delivered a ton of cars, but the EV credits are going away in October, November, and December. Are they going to struggle during that time period? I know the solar credits then go away at the end of the year. I know because I'm in the midst of getting a solar system put in on my house here. You have to think through those things as an investor. What's on the next 3-month horizon? Is Tesla a long-term hold for me? Abso-freaking-lutely. Am I really going to care if I got it for $400, $350, or $450 when it's $3,000 down the road? Nope. Not really going to care. But in the short run, if you want to maximize your portfolio, you can buy 10% more shares at 400 than you can at 440. Wouldn't you like to be 10% closer to your goal number of shares? So think through all those things. Don't feel like you missed the boat. Wait for it to mean revert, but make sure you're ready to take an entry then, right? It may only pull back 20 points, 40 points, 50 points. Be ready to take an entry if it does. Same thing here with Nvidia. Nvidia was on a screaming tear up. This is Nvidia on the daily chart. We've been respecting this linear regression channel. It has widened just a little bit. It was a really tight channel until we had this pullback to around 165. That was at the beginning of the month of September. That is the support. 165 is the current floor level of support for Nvidia. The mid-range level, it's just living in this 170 to 175 range, and then the top is 185. It's that simple. We're at the mean on the daily chart right now. We're almost at the mean on RSI. If we come over here to the 4-hour chart on Nvidia, you can see how many times we've tapped this all-time high. That all-time high, if I really zoom in on it, you can see the all-time high right here is 185. 185, 185, 185, 185, 185. It's just that we're just tapping against that level, trying to break through it. It's proving to be very strong resistance. Every time we get near 185, there's a sell-off, right? But it is starting to do something similar to what we saw with Tesla. Notice it's kind of winding up. It keeps tapping and tapping, but it's making higher highs and higher lows all along the way right here, just since the beginning of the month. So for the last month, higher highs, higher lows, it's winding up. It's kind of coiling up into this triangle pattern here. Wedge pattern. Wedge. Thank you. Wedge. Oftentimes you'll see a breakout. How high will the breakout be? Whoa. Whoa. There we go. Couldn't get rid of the drawing tool. The breakout oftentimes will be this height right here. So whatever the height of the, so 165 to 185 is a 20-point increase. So if we break out of 185, you add 20 points to that, you're at 205. So we could potentially come up here to this 205 level if this wedge breaks out in a manner in which I think it may, right? There's also a chance that it does not do that, so just keep that in mind. But if there's a breakout, 205 would be the next level I would look for it to really slow down. Will it slow down at 200 because that's a psychological barrier? Absolutely, it will. But could it wick up to 205 or so? Yep. And you might be able to catch, maybe you bought it at 165 and you want to sell it at 205 and make a quick 40 bucks, right? That's what it's all about. Is this a hold for you? Are you an investor? Are you going to hold it forever? Or is this a trade for you where you want to try to grab as much gains as possible? So buying at 165 and selling at 205, that's a 40-point move. That's over 30%. That's like almost a 40% move. Right? Almost a 40% move. So sometimes it's worth it to go ahead and bag those. Going along down the line, what's the next one that I usually talk about? MicroStrategy, Tesla, everybody's favorite. This is the one that I did make a video about. So go ahead and tag that video up here. Go ahead and take a look at it. I made it on Friday asking, is this pair trade dead? And I'll summarize here. I'm not going to repeat everything, but we were just at this level. This 0.70 level, we were back there at the end of December. So it went from 0.70 to 1.5 back down to 0.70. That is a double and a double. So had you gone from Tesla into MicroStrategy here at 0.7, exited your MicroStrategy into Tesla at 1.5, and went back into MicroStrategy down here at 0.7, you would have considerably more MicroStrategy, right? You went 100 here. You went into 100 MicroStrategy here. You took those 100 and turned it into, double the number of Tesla shares. And then you took those double the number of Tesla shares and doubled it right back into MicroStrategy again. That's how pair trading works, okay? If you look at it on the short run, you'd go, well, gosh, this is dead. It's just going straight down. Perhaps. But watch the video and then ask yourself, with all the data that I put in there, ask yourself which is more likely to happen, right? And I don't want to give away the punchline. I want you to watch the video, okay? But right now, we are bottomed here at 0.70. I was the one saying all along I think 1-to-1 was going to be the bottom. I was wrong. It did not turn up. It kind of turned up, came down, turned up, came down. Is it going to do the same thing this time? Turn up and keep going down? Perhaps. Watch the video and determine it for yourself. I'm going to leave it at that. MicroStrategy IBIT, same thing here. I thought that was that 5.5 or so. I thought that was it. I went in and did a swap of 100 IBIT into 18 MicroStrategy at that point. It went down even further, right? So right now we're sitting at 5.0. That means for every for every 5 shares of IBIT, you'll get 1 share of MicroStrategy. For every 5 shares of IBIT, because IBIT is the currency, it's listed second. That's what this ratio is down the side. It'll cost you 5 shares of IBIT to get 1 share of MicroStrategy. It cost me 5.5 shares of IBIT to get 1 share of MicroStrategy, right? What has this been as high as? Well, guys, it's back here. It was up near 10. It hit 9.84 back when MicroStrategy went on its meteoric tear to 550. But even as recent as May of this year, we were up in the 7.32 range. So you have to ask yourself, is it worth it to flip back and forth between MicroStrategy and IBIT or MicroStrategy and Bitcoin? That's what the ARB cloud over here also looks at, is that ratio. When it's below the ARB cloud, it's a good time to go from from IBIT into MicroStrategy. And when it's above the cloud, it's a good time to go from strategy back into IBIT, right? So you could use the ARB cloud alone to go back and forth between the pair. You can use the pair trade over here on IADSS to go back between the pair. A very simple rule set if you're using IADSS. When you're in the upper 1/3 of the Confluence cloud, if you have it turned on twice, you have 1, 2, 3 zones on the Confluence cloud. In the upper 1/3, go from MicroStrategy to IBIT. When you're in the lower 1/3, like we are here, go from IBIT into MicroStrategy, right? That's an easy way to look at it. You can also use the depth of the mean reversion dots. When it's over 2 standard deviations to the downside, go from IBIT into MicroStrategy. When it's more than 2 standard deviations to the upside, go from MicroStrategy into IBIT. IBIT into MicroStrategy down here. There's a million different ways you can skin this pair. Part of it is just getting in there, seeing how it behaves, and starting to find the rhythm that works best for you. Last but not least is the, rotation model is right there. Rotation model, the last signal we had on mine was to go into Nvidia. Nothing has changed since then. MicroStrategy, that's what's showing on the chart. MicroStrategy went up, MicroStrategy went down, but it still says to be in Nvidia right now per my chart. Here's the thing. I would have rather to have been in gold right now. As crazy as it sounds, GLD is on fire while Nvidia has kind of gone flat. MicroStrategy's gone down. Tesla went meteoric. That would have been another great one to have been in, would have been in Tesla. And last but not least, Palantir is still kind of going, it went up, but then went sideways. It's kind of been sideways, kind of a lot like Nvidia lately. So honestly, gold or Tesla would have been the call. And the last time we got a signal on either one of those was all the way back here in July. So little disappointed in that. Could be because I have my settings wrong on the rotation model. There's a lot of things that I could have perhaps set differently there, but just saying that I'm not going to discount gold moving forward. Let's put it that way. I think gold and Bitcoin are going to be the ultimate winners over the next 5 years. And I'll make a video on that and explain why. That's going to be a good video topic, and we'll leave it at that. Here are the preferreds. The preferreds, STRK took a dump, right? It dumped all the way down. What does that low say? I can't even see it. 88, dumped all the way down to 88. STRK was up at like 130, guys, 120s, 130s. Same thing with STRD, STRF. STRF was as high as, at one point, 130-ish as well. It's been hovering around this 110. Why did it jump up a little bit today? Why do we see STRK jumping up a little bit today? Why do we see STRC jumping up a little bit today? Because the dividends just paid out today, guys. This is the dividend date, September 30th. So many people like myself turn around and reinvest their dividends. So when STRC pays out an 83 cents per share dividend, let's say you had 100 shares, that's $830 you get paid out, right? 83 bucks, if I could do the math on 100 shares. You get paid out 83 bucks. That's enough for you to turn around and go buy another share of STRC, right? You can go buy yourself another share of STRC. That math doesn't sound right to me. Hold on a second, guys. 0.83 times 100. Yeah, 83 bucks. All right. Sorry, I had a brain fart there. I got to check myself every now and then. So 83 bucks, you can almost buy one more share of STRC. So if you had 100 shares of STRC and you got paid out 83 cents a share, that's $83 you just collected, and STRC is currently going for around $97. You got yourself 0.8, 0.85 shares, 0.83 to be exact shares of STRC. So now you have 100.83 shares of STRC. The next time you get a payout, you may be able to get up to 102 shares of STRC. So you can see you can compound your growth by reinvesting your dividends in. If that doesn't make sense to you, I have done multiple videos on the preferreds. Not everybody is a preferred investor, but if you're retired and you're looking for a steady stream of income and you had $1 million in STRC, it's paying you out $8,300 a month. $8,300 a month, which for most people is enough for them to be able to live on. If your houses are paid, your cars are paid, your kids are paid and they're off a payroll, your weddings are paid for your kids and their universities and all that stuff, $8,300 a month without even having to think about it is going to get paid out while your principal stays the same. The $1 million stays pretty close to $1 million plus or minus 0.5% usually either way. All right. Hope you found value in that. All right, guys, I hope you found value in today's video. If you did, make sure you smash that like button. If you would, please comment below. What did you like best? What did you learn today? What would you like to see more of, right? Also, make sure you're subscribed to the channel so you don't miss any of the videos that I'm doing or that others are doing like mine. There's a lot of people out there making TradingView and technical analysis videos, right? Maybe you like my style, maybe you don't. But subscribe to the channel so that way you're seeing others who are making like-minded content. You can decide for yourself which one you like best. Please make sure you book a course with me. As far as individual appointments, those are full right now, guys. I'm not taking on any new clients from an individual appointment standpoint, but my courses are always available. I have a TradingView and technical analysis course where I teach you everything. All these different things I was going through today, you'll learn all that and more by booking the TradingView and technical analysis course. If you want to learn options, go buy Michael Sincere's book called Understanding Options. Book my Understanding Options course. And then you're going to want to be a part of a community that we're going to be talking options left, right, front, and center. And you're going to understand these things inside and out. Okay. And I'll leave it at that. You can do that at the link that I've provided for you here. And finally, guys, I'm G Dinero. I'm here to help you increase your financial literacy to help put you and your family on that path to financial freedom. Thanks for tuning in today, and we'll see you next time.